All right, let's get into it. A little bit of a weekend review, weekend wrap. Have a look at sort of how things finish up on Friday, because obviously quite wild. And then obviously see if we can sort of pick out some trades, some levels, some sort of themes for this upcoming week, which is going to be a massive one. It's actually, I say it's finally here, but there's a good chance, in my opinion, that this will probably drag on for a little bit. Like, you'll have sort of delays in reporting, like election I'm talking about. That's the big one. Obviously, the big thing on everybody's sort of mind and radar at the moment. But I think there'll be sort of like disputes of the numbers. There'll be delays in the reporting of the numbers. Then I don't think, excuse me, this is going to be a straight, clear-cut thing by any accounts. And I won't bother getting into the whole sort of politics side of sort of things and that because really what I care about and what most people care about is what's going to happen with the markets, what's going to happen with the charts, what's going to happen with the flows, how people are going to be feeling about it, and that's going to govern what they do and where those flows go. So that's what I'm trying to sort of determine here. And I think sort of the overall kind of thing is that with uncertainty, which we know markets do not like uncertainty, like mainly when people say this as well, they're talking about equity markets. So when they've got uncertainty, it's okay. I'd rather have my money in my pocket than to take the chance that it might go this way, might go that way. So that's the feeling. So that's obviously risk off. In those sort of situations, US dollar is safe haven. Typically, you know, I say typically because typically gold has traditionally been, but as we've sort of covered, or I've covered a couple of times recently, and that we've seen that that hasn't been the case because gold and DXY have been sort of running concurrently. Um, Yen has also been a place, but we know that the yen, because of the BOJ and their sort of monetary outlook, really, for the last couple of years, haven't been their traditional sense of safe haven. And I guess Swiss franc as well, typically. And I don't actually follow any Swiss crosses. So, I mean, look, I understand the flows going over there, and that's it's sort of its role typically to sort of play. But yeah, it's not something that I sort of cover. So DXY, US dollar, that's the kind of thing that I'm sort of obviously I cover every day. This is what I'm looking at. And to go over the sort of price action of what we're sort of seeing at the moment, I mean, look, this is a very typical, as I've said each day, this is a very typical turnaround of DXY. Because again, if we zoom out and we go back to the last couple of times it's been high, up the highs of a turnaround, you know, picture none of this having happened yet. You know, you're at this point, and this is all you can see, and it's going up, comes down, goes up, tick, 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 comes all the way down. Okay, here we go. We got high, 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 bang, it's sold right down, and it's up again, and then it sort of falls. So, look, I'm not saying that this is guaranteed that we're going to get the turnaround top of this, of DXY, of this move that we're sort of currently in. But if we look at previous times, and this is what you kind of your back testing kind of things are, this is very typical for the way that it does work. Same sort of thing here. Look at the run that had been coming up through here. Very bullish, very bullish, very bullish. Oh, it's coming down, 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 down. All of a sudden, out of nowhere, bang, right back up to its highs. I mean, this is from the 17th to the 1st of May. So, this is on a 4 hour. So this is a couple of weeks that it's looking like, at one point you're looking at this and you're like, okay, lower highs, boom, here we go. Lower lows, yep, okay, it's coming down. And that's the thing, sort of like the big people that still think it's going up. Well, here's a flag, and it's broken the flag, it's come up to the top, and then bang, all the way back down. So, you know what I mean? It's very typical for it to sort of turn around just to see these kind of like, it's not generally this kind of move isolated by itself, as in one move up, one move down. So, it's not sort of like complete sort of beyond like, oh my God, we've never seen this kind of price action before. This is typically what it does. it's sort of like, okay, the highs, the negative divergence through here, the weakening of it all. Oh, it's coming down, it's coming down, it's coming down. Bang, right back up to the top. Highly possible here. It's also possible that this actually was it. That was the pullback. That is the thing we've got. I mean, we had this little channel coming through here. This could be the determining leg that we've been looking for. Because remember, structure with this sort of stuff will go up, find resistance, come back, find support, and then it'll get a leg like this. And this leg will be the determining one. So the fact that we had this nice little structure here, whoop, let's get these out of here, whatever, don't need these ones. The fact that we had this nice little structured pullback, we could see it if we zoom in a bit more, can see this is very much bang, bang, came through here. But like the bottom side here, top side here, we had 3 touches with this one, including the one that sort of set it up to start. We had, multiple touches here. Whoop, not this one here. Multiple touches through here to sort of confirm this. So it was a nice structured sell down. Hit the price target to the cent, pretty much. I mean, if you look at this, this was the one that we sort of pulled out the other day, because I was saying that, look, this is the channel. And this is what I was saying as well, that, like, you know what I mean, of course, I'm not the only person seeing this, and if I'm not the only person seeing it, other people are referencing it as well, that, well, that's a good idea that that's where the market's moving. And this move down here to this price target was the measured move of this channel that came up here. That's how you do it. You take the highs and the lows of the channel, you do it from the break point, and bang, down into price target. And market just went crazy after that. That is an insane bounce off that low. So anyway, back onto what I was saying. We had this nice little structured pullback, and this could, or potentially is looking like it's going to be this leg now. As to whether this leg goes higher, makes another high, another sort of equal high, so a full top sort of thing over here, or, not clicking the right stuff today, makes a lower high here. This is what's going to determine the strength, in my opinion. I think we've had the sort of like the fake, well, not the fake, but I guess kind of fake move back ups kind of thing, where we've seen it, lower buying pressure, lowering buying pressure. We've had that little area now. Now we've had the pullback. This is, for me, is a nice pullback because it broke all these lows along here. You know what I mean? This whole little range up over here, it's done what it needs to do in the sense of sort of like dragging a lot of people. I'll get into what the actual move was about in a second, but I feel that this is the move now that we're looking at. The range, the idea of the range is gone to a certain degree because we've broken it a number of times, we've closed outside, we've done lower lows, all this kind of stuff. So to me, that the idea of this being the range is kind of done now. So I'll move that back over here. But I think sort of like, if we get this move up through here, things to watch for, obviously this level here. And well, actually, yeah, pretty much that level there. And also particularly if we do see a little bit of a fizzle out earlier. Because if we see a fizzle out earlier, then, we've got back here. This is its attempt now. That will give it a sort of lower high in a structural kind of move. You can see it a bit better here. Calling this a sort of a top. This will be your run through here, and then it's a pullback down over here. So I would be, again, look, I'm sort of in the camp that we may actually see a little bit of dollar weakness, which I have been sort of touting through this area here. And obviously that move on Friday kind of, look, it snapped me out as well. Like, I'm an in and out trader. I'm not a buy and hold and go to thing, but for some stupid reason, and I can even identify this in myself, the last week or so I've been like, yep, okay, here we go. Here's the turnaround. This is the one where you're going to buy the lows and it's going to hold and run. Not the time to be doing this. It's stupid. Even as I say it out loud, I kind of shake my head and go, what are you doing? Stick to what you know works. And, had I done that, would have been, look, the week was profitable, but it would have been a lot more profitable. You know what I mean? Like there's a lot of missed opportunity, and this last bit here went from a profitable trade to getting stopped out with not shockingly big, but like, enough to stuff the day. Stop out through this area. So really poorly managed on my behalf and that sort of through this period here. But the idea is that, like, I mean, who the hell saw this move back up here? And this is what I'll say. So I'll cover the news because this is what drove that, the non-farm payrolls. And look, I've heard a bunch of different takes on this, but this number here, 12,000, is insanely low. I covered the, oh, covered, I put a post on X at the time. And I said, look, this is equivalent to Australia adding like 800 jobs. 12,000 jobs for a country with 350, 360 million people. Yeah, come on. I mean, like, that in itself is like, that is, should be warning bells. That should be sort of like, okay, wow. People are like, because you, again, you got to extrapolate these things out. And I know there's been the hurricane down in Florida and these kind of things. And I get that, and that will impact things. But come on, like so you're saying that sort of like the rest of the country didn't employ anybody because there was a hurricane in one state? Come on, that's a bit far-fetched in my opinion. You got last month's number revised down, big shocker, down 30,000. They're expecting a drop off anyway, and that was probably due to partly, that hurricane stuff in Florida. But 12,000 is incredibly low. Yes, okay, unemployment rate didn't go up, which is a bit surprising, I suppose. But end of the day, you got to think, like, again, it's the same stuff we cover every time. When are you hiring? You're hiring when things are good. You're hiring when you're expanding. You're hiring when you're confident. When are you not hiring? When you're not when you're not confident, when you're not expanding, when you're worried about are you going to be able to pay the people that we've already got this month, next month? Let's work with what we've got for the moment. That is moving towards kind of recessionary kind of sort of stuff. Like, obviously, that's not the only number, but non-farm payrolls, NFP is a big section. That's a big mover. That's like the same kind of mover typically as CPI, which I call second tier data, only behind FOMC being the holy grail, which of course we have coming up this week as well. So it was very much a shock kind of move. So if we get back to the chart, that's what drove the sell down here to hit the price target. That's fine. But if we look at the reversal, look at this. Bang. And then it just grinded higher, 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 higher. My only feeling with this is, apart from what I just sort of said before, this is typical of how DXY turns around. It gets people into positions. I mean, this is, you see 12,000. 12,000 in any other settings should have been down here. It should have been one of these continued down, 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 down. But this is obviously reversed all the way up over here. So, this I feel is a move potentially, as I covered before, for a risk off, for uncertainty, for coming into the elections. That's the only thing I can really sort of feel at the moment of a reason, like, because it's not based off that data, which obviously impacted the market. We saw it sell off. That's not a time in which you go, oh, yep, that's great, yeah, yeah, sweet. They're gonna hike the rate, so then they don't need to cut it all here. Look, they're gonna cut. The idea, I think, is pretty much a widely renowned 25 base point cut. I don't think that's going to be the thing that tips them to do another 50. But, typically that has been the sort of reaction, like to go down, down, down from these kind of really poor numbers. So this is a very odd lot of price action to sort of see coming to doing. But in saying that, I haven't even looked at this, but I had a feeling, yeah, so look, this has sort of come back down as well with it all. I was going to say, I thought this was, I saw somebody and they were saying it was up, but no, that kind of seems to be sort of sold back into. So we do, that's S&P, you see it top left anyway, S&P there. We got NASDAQ, we got Nikkei, China, so ticking along, Russell, all this down, 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 down. So again, I think the fact that, you saw the markets move off, where we're talking about, we saw the markets move off the data, how it should have happened, but then it's reverted back up EV. So again, I'm attributing this to uncertainty plus a touch of Trump Trump win pricing. So with that, what I mean by Trump win pricing is the idea that Trump's going to be hard on tariffs, which people say and believe it. Look, I've heard other parts of this. People say and believe that that's going to be inflationary, which what I mean. I'm not a full economist, but you can see how you'd reach that conclusion because although sort of Trump wants to put tariffs and that like on China, on anybody that doesn't use the US dollar, like he wants to just bang like let's put tariffs on all of them, which is fine. Um, you know what I mean? It's going to cost these people more to get their products into the country, but they're not going to not send the stuff. And America's not set up to make it all internally. That's the thing. It's sort of like if they had equally competing industries with on all accounts. So say they made their own TVs, they made their own. Well, I guess they do probably make sort of cars and that there, but you know what I mean. Like there's obviously a large portion of other, stuff coming in from other places, and China, world's factory, yada yada. There's a lot of stuff that does come in from China. So unless they're going to sort of make it at home, which again is still going to cost more because the wages are higher because they can charge a lot less with it. That's why it's cheaper to get something built in manufactured in China and shipped over and then sent here because the wages are so low there that it makes it actually competitive, opposed to paying Joe Buck down the road, a couple more money, a bit more money in that to build it internally. You can see that sort of like, well, they're going to have to charge more for it because it's going to cost them more to get it in. Well, inflation ends with the end user. You know what I mean? There's the producer sort of side of it all, but realistically, that it's a trickle down effect, and inflation ends with the consumer. And that's if they're going to be paying more for stuff, well, that's inflation, and that's inflationary, and that's the belief that sort of people have that sort of because it'll be harder on tariffs, things will cost more, and if they cost more, then, well, obviously that's going to be inflation up. Fed's going to have to sort of take a more hawkish stance to sort of battle that or to deal with it. And with that, then they're going to obviously have to sort of have a bit more of a sort of hawkish outlook, which is going to be stronger for the US dollar. And that's the play out of the Trump idea of him sort of winning. And Harris, obviously, look, I mean, you still need to, even though it looks like she's going to get absolutely walloped, you still need to expect that there are going to be segments of the market, and there are going to be some people that do believe. I mean, she is a candidate, so there is still, of course, a likelihood that they could win. So I don't believe you're going to get major breakouts prior to it all, but maybe if Trump does get in, that's when you'll see your major breakouts, and you'll see these levels get taken out. We'll have to sort of wait and see. But as I said at the start, I don't think that's going to be a super fast resolution. I think this is going to take a little bit of time to really play through. So that means up, down, up, down, up, down, and potentially sort of just bouncing around these levels through this period. I don't think we're going to get the breakouts up over here, but of course, can definitely be wrong with it all. Um, but we'll have to wait and see. Just having a quick look at this as I say that now. This is actually, you know what? I don't like 30-minute, but we can see a little bit of a negative divergence through that last push down here. Oop, let's take this one here. See this little push down here, and this is why I say negative divergence are very great. I didn't catch this at the time, of course, but point is still that we might as well mark it out on the chart because this is a reason, or not a reason necessarily, an indicator of that move bouncing back up. What a bounce, jeez! As I said, definitely it caught me off guard, and I'm sure it would have caught a lot of people off guard and left a lot of people sort of a little bit sort of bewildered with it all. So yeah, anyway, look, that's the overview of it all. The top level over here, 104.60, that's the one to watch in that to sort of see if we see a breakout higher. We do have this little level through the middle here, which is, again, I say every week, we don't worry about this last candle so much. That's just the end of the week. So kind of ignore that, and you're looking like a pretty bullish little close to the day. And obviously it's got that momentum taking out these previous highs over here. So look, I'll watch to see what happens if we do start to see a roll down over here. These are your levels to really sort of confirm now that wick low, or this level just up over here. That, geez, I'm not clicking anything today. This going on with this? Let's make it a bit bigger. This level and this level. They're the ones taking out that wick down here, taking out the wicks at the top over here. I think they're the two levels to sort of see some sort of direction sort of moving forward. But I imagine it's going to be quite whippy up and down sort of through the week. Just before I flick onto the next one as well, so let's go on to DXY on a wider scale. So let's put this onto a weekly thing. This isn't my chart, but I did see somebody, see if I can replicate it. Monthly something. Must have been from these lows down over here, 21. So I don't do these charts before before I put them on the screen. So yeah, I think this may have been the line that he was looking at here. Let's just get rid of this stuff for now. But this must be the line that they were pulling up. This as something to watch. This is on a on a monthly chart. Not my typical kind of thing, but you can see how this would be support, support, broke through. This could be retest area here. And if you look at this actually now, if we look at it, again, monthly is way higher than the time frames I look at. So we'll push down, let's push it back up. Well, this could tip around here. This could sort of flip around and sort of come back up and say push her over the top over here. Look, I think it's just this. I saw it and I'm like, hey, look, that seems reasonable, and it does. That this could be a little rejection here, but again, it finished quite bullish. Sort of last month, which was what, 3 days ago or something. So yeah, let's see what happens. Look at that, no bottom wick on that. It's actually monthlies don't seem to really sort of respect that sort of wick on both sides kind of thing. But yeah, I think definitely we're going to see some major moves this month. I think we're going to really sort of see it sort of coming through. Well, not necessarily coming through here, but I think this is really what we're sort of playing with at the moment. Which means, you know, top side, this is a monthly, so these are very big moves, mind you. This is 104 back up to 106. So, you know, a break above here, that's most likely where it's looking at, 106. And if it does fail from here, well, of course, you want to see if this baseline goes. So I think, you know, major breaks, and this is obviously not something that we need to worry about now, but that's your outlook, sort of moving forward. I mean, into 2025, unless they decided to chew this range for a long time here. But I mean, obviously, look at this since Jan 23, so you know, 2 years or so, just basically in this range. So yeah, it's no doubt that they actually found a little bit of support down the side over here. I would have actually had that sitting there, so obviously a little bit of a tip at the bottom here. But I think that's very much a range that you can sort of play off for longer term outlooks. All right, anyway, whatever, enough of that. Let's get on to something else. Gold. And gold, excuse me, did get its rally. So this is what I covered on Friday. I said, look, you know, I referenced this last move that we had came down here. Of the thing. Yeah, so this was the last big sell down we had. We came back up. I said, look, you know, between the 61 and the 78, where did we go? We came up and just kissed the 50% retracement and then got walloped again. And this is the thing that sort of, it was grinding up through the day. We saw it, let's get rid of these ones because I didn't really respect these. That's just an idea. It was grinding up through the day. It was looking okay. That data came out. It actually put in a whole bunch of new highs. And then just as we saw DXY fire back up, gold got smacked back down. So this is almost like the V move of gold and DXY moving back into their normal inverse relationship, which we've been talking about. Because this is the point where, you know, you can make a bit of money with things because they've been running together for a long time. They've both been selling down, both been moving up. Now we saw gold move down. Obviously, I just covered DXY move back up in the last couple of hours after that data coming into the end of the week. This sell down here, look, it wasn't enough to take out the low. So at the moment, technically, what you've got is a double bottom. Let's drag this through here. This is what you've got at the moment. So this is very much a sort of line in the sand. Above 30, 31, you could be looking for a little bit of a double bottom, a potential range, a double bottom here. Should we see a little bounce? So once, back. And yeah, so a double bottom through here. Whoop, takes you back up 27.80. That's if you get the double bottom down here. I mean, as it is right now, as I said, you don't worry about the last couple of hours generally, but the thing is, it did find buyers where it had previously at. And if you look at these sort of moves down through here, the buyers had stepped up a little bit. They're holding the line now. So it's slightly different in the sense that they're not still progressing, but they are holding the line. So below 30, well, then you look down to where we'd see them previously. Yes, you could get a little bit of an overshoot to down these to 28 or so like this, and maybe it does a little fake out, moves back up. But more likely, I would say if you, if you get a break of 30, 27.18 is your next level. Underneath that, 2700, which is a fair sell down. So if we look at this to sort of be, if this were to be a move like this, because of that last push up, that's kind of 27.05 is kind of your downside target. If this were to be a bit of a bear flag. Depends where you like to use. Typically, I do the last move, actually, and I'm going to stick it to that. I'm not actually going to go, because this is the part that I like to sort of call, not that whole move. So I'm going to delete that. I'm going to take this and put it at the top over here and call that your little downside target. I think there's a chance that we hold this level here. As I said, I think while we had a little bit of up and down through the week with DXY, I think gold does the same. I think we don't see breaks of levels and that till, we got FOMC coming out this week, remember? RBA, which obviously isn't necessarily going to affect gold, but still FOMC in the election, that's going to sort of thing. So I'd be surprised if we get breaks. But look, if we break below 29, I think, between 27.10, 27.15, that's the kind of area where you could see another sort of little move back up. If you do get a break of sort of like, say, 27.50, that's your price target to the top side for like for a potential double bottom on this pullback. And, then we're kind of sort of looking at quite a big range, but, gold's not sort of adverse to doing $50 ranges. So, this could very much be a level where we go through here, and then we look at something up like that. And that could be your sort of range that we start to build out. Then you've got your midway point with it all. Breaks here, this turns into a support, and then you're tackling this side of it all. So I think that's your outcome. I think so really your direction's going to come once you break 30 or break 55. These kind of two levels here. They're your sort of ones, and you've got your price targets either side of those, and then sort of maybe swing back towards the middle after those sort of moves. Cool. All right. So in the short, come Monday, above 38, I think, we might see a bit of a rally. And below 30, below 30, I think we see a move down to these downsides over here. I'll cover that a little bit closer to it. Silver, again, same sort of thing. Tried to get up there and it got smacked down. Now, I did sort of call this out the other day because I'm like, this is a decent little support here. And it held and it did react well, but this falling resistance was a little bit stronger than this rising support. As you can see, broke through at the end. It did hit this little sort of horizontal. If we see on the 4 hour, it looks a little bit better. This is obviously where the buyers were. This was the big strong line that we sort of held time and time again. Like, remember, got above it, boom, got above it, and I covered this one over and over. And I said, look, we will come back down and test this. But you know what? I was a believer. I sort of thought, well, gold isn't coming and doing its retests. Why should silver? But here we are, bang, and it's just kissed the top side. So look, it found support where it's supposed to. This little RSI, even on this last move down here, very small. But this is like this is maybe a bit of a long stretch, but if you look at this move here, that's actually moving up through that period, albeit small, maybe hard to see, but that's a low, that's a low, that's a high, and that is high. So that is actually sort of moved down that last bit on lower thing. And this is what makes me think that that last move was a last ditch effort because everything says it should have been going back up and it didn't. We found resistance where we marked it out. There was a confluence here. This is why we had the two ranges. This was the support for that swing back up. It was also touching on the sort of, the spike highs over here. But that's why I put that sort of area through the middle here. And this is what we say that's, support and resistance, they're the same level. It just depends which way you're going through it. So this is up, break, retest, also falling resistance here. You can see this one probably a bit better on the 1 hour. As you can see, sellers, every time it hit this line, sold it down. And that's exactly what they did come Friday as well. So it'd be interesting to sort of see where we go here, but I think sort of same sort of thing. I think above 33.10 above here zones below here. I think they're the ones that are going to give you your little direction now. So here, down here. Actually, we've got another one. Direction. Boom. Makes it a little bit easier. That's the kind of play I'm looking for with silver come this week. So most likely, again, you don't worry about the last couple of hours. So I mean that could mean disregarding these ones here. Could be a little bit of a fake out. To prove that, get above 33. And decisively, 33.20. So above 33.20, you're coming up to test this thing. Which is, it's going to, I mean, look, there'll be little horizontals across here, as you know what I mean. You can build this out and sort of say, look, this will be an area of interest. We carry this back along here. That's kind of an area of interest there. So, I mean, it's not going to be easy, but certainly I think that they're your two levels to sort of see if are we going to get continue down, in which case, this could be some sort of potential channel like this, mid-range as well. So there's little areas where you could definitely find support if it goes down under here. And as I said, look, if you see gold break those lows and find support underneath, silver will do the same, and then you sort of move back up here. But I don't think we're going to get major breakdowns, sort of at least till the election results, and also with, as I said, with FOMC coming up. So I think that's really more your little range that you're going to be playing. So up to between 33 and 32.20, 32.40. All right, and flick it along. We've got Aussie, which just continues, excuse me, to disappoint. Well, I mean, look, this is the range that we put in. These are the levels we put in. Where did the sellers come? They came exactly where they're supposed to. And this is where I sort of got a little bit blown out with this, because this is the move that I was looking for, which, is a very plausible trade. Given the data that we had sort of coming in, and got into the position here, as I said, had a nice, no, not massive, but a nice little profit over here. Came back down, had a second go. I'm like, oh, okay, it's just shook out. Yep, I avoided that. So, stops around and then just bang, disappointing to the end of the week. But that's life. But it is still ranging down the bottom here. Below, 65.30s, then you're in trouble. And you're looking down, to 65 is pretty much the range measure move target down here. And then sort of if it can get above 65.80s, well, you're running into a whole bunch of sort of headwinds around 66. And then sort of course, 66.24. So look, upside is definitely capped moving through here, but it is, remember, trying to sort of work its way out of quite a large wedge, as you can see, moving down through here. And as we know, wedges are typically reversals. So, it's stopped going down for the moment. That's not necessarily a great sign. It's just well, okay, for now it's stopped. What this can be is something that moves down, up, up, whoop, up, like that. It could just be a stall before that. You know what I mean? Like when you want to sort of buy things that have dropped a lot, if it drops really fast, like a sort of like a waterfall, like straight down, then you've got a chance to go straight back up. If it comes down and does this, basically consolidates down the bottom, this can just be a holding pattern for the next move down. And as I said, with a major breakout of DXY, this is a very likely possible, which is just amazing to me, since we were trading up yearly highs just a month ago, or a bit over a month ago. So yeah, there's certainly a potential for downside on Aussie here. I do think we are going to see this recovery, even if it does sort of come up here before sort of doing this. I do think there's more to be sort of gained by selling it down from these levels over here to down over here than it is to just sort of hold it here and then sort of break down further. But given how weak it has been, with the RBA coming out this week, if they sort of come out with a little bit more dovish talk, there's certainly the possibility that we are looking at some more downside for Aussie. So let me just get all these things out of here. Oh, not that one. Cool, and back. Yeah, so with the Aussie, I mean, look, it is very weak. It's obvious it's been very weak. I've been wanting to get the short side of this thing for a little bit here. Um, Half the point of doing these analysis videos is to try and sort of, apart from the fact that this is just a process, and I use this to sort of, as I said, well, obviously do the analysis and get my idea about where the flows are moving over the market. But it's also another thing. It's good because it kind of keeps you a little bit sort of, gives you a little bit more, hopefully, sort of not so confirmation bias, sort of stuck in one direction. Yep, this is happening, and so you got to put it out there to all of 10 people that watch this. I think I get more. I think I get about 15 or 20 on the weekends, but regardless, it's a point so you can sort of see. Look, it's so glaringly obvious that this has been sell, 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 sell down here. I mean, I've been trying to sort of, as I said, build some sort of long position down around here in the idea that we get a bigger move up over here. But I need to be real with myself as well. And if we break below this 65.30 level, there's a distinct possibility, as I said a second ago, this is just a stall and we could see quite a significant move back even lower down here. So, as I said, Aussie's market's favorite pastime is selling Aussie. It has been crazy buying it for a while. Now it's been back doing what it loves, selling it down. If we see US dollar break out over those levels, and as I said before, potentially on a monthly timescale, you could see this moving towards 106. Aussie will come down over here. So that means short opportunities, stuff the idea of catching lows, go short underneath these levels, and then if you want to try and sort of catch the lows, look for the corresponding levels lower down. But that's more of an overview of it all. So right here and now, we can drag this through here. We can say, look, this is a bit of a wedge, which we've already identified. Bit of an overshoot down here. Try to come back up. It tried to get through, obviously, off that data. Like everything else, smacked back down. So I don't think it's necessarily, okay, well, because of the sell down here, that we are going down over here. Had this sort of, probably, it does it better, I would say, the fact that it didn't break out. And I've covered this before in a couple of things with these setups. Because I'll say, firstly, a failed breakout is as good as a breakout, just in the opposite direction. So had we seen a breakout and say closed up here, that means, okay, here we go, we're giving it a shot, real thing, and then sellers just swoop in and smash it back down. That is what happened in the sense of the latter part of that. The sellers came in and smacked it back down, but it didn't actually break out and fail a breakout. All it did was just sell down and stay in the range of where we know the sellers have been. We know the sellers are around this level here. We've identified that. There's no shocker. So the fact that it sort of didn't break out and sort of just kept on the range means more likely, okay, we just continue with the range for now. Again, breakout below here, we move down. I think a break up above here. I still think, and this is the whole point of what I was saying a second ago about trying to sort of keep yourself a little bit sort of more honest and not so confirmation biased. That because I keep saying the long side on this, which it has been sold down a lot. We are around the big 61%. It is holding this area here. If it does break out here, this is the course of action that is a plausible trade. This is a very realistic idea. However, this also, there's going to just take a little bit of stuffing around here. This is also a plausible trade. Down to the side over here. So I think they're really your sort of your areas that you're looking for. And we've got the little measured move price targets enough to sort of say here. So again, if we see, you can see buys each time have come up here a little bit. So not that this is a major trend or anything, but you can see that they are progressing up a little bit here. So let's put this here. I'm not a big fan of this one, like as I have been with the I need to change this. Buys. Albeit small, they have moved up. If they sit here and we come back up through here now, we can see that they are, like, they're holding the line where the sellers are. We can see the buyers are progressing up a little bit. This is not enough to sort of say that this is the bottom. This is the end of the week. We don't worry about the last couple of hours. That was previously where we'd seen it. Buyers, 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 bang, push up here. And remember, this big move up here was the data, but prior to that, on normal price action, buyers had stepped up here and held this zone. So you can see that the buyers are trying to push it back up off these lows. You've got the sellers holding the line here. And we've seen this set up a number of times. Remember with gold breaking out from 2500, that range that we're in, to 2530, that big breakout we had there. We saw silver the other week when that sort of broke out. And we've got a solid straight line where we've sort of got the sellers are sitting. We can see the buyers are moving up. They're pinching this area here. So this is why this is the vital area. This is the area you want to see a depletion of sellers at 65.80, 65.90, this zone through here. However, if we see that this sell down continues and comes back down here, the buyers are here, then you've got that range, and you want to, well, you don't want to see, because I'm trying to look long on this, but you got to be aware that if the buyers aren't here, they're going to be sitting down here, and then you're going to get the people flip around and they're going to go, okay, let's get out of these buys, sell, and move back down over here. So that's your sort of course of action. So we are seeing the buyers are at the moment sort of kind of grinding up through here. If we do a little bit of a line through here, not really a big fan of this, but we'll see how this reacts sort of come Monday. If we see that sort of sell down just continue and just melt through this line here, well, that's possibly what we're looking at here. But we'll see how we go. As I said, it's a massive week. We got RBA on Tuesday. We got FOMC on what day? Wednesday, I think. This is the week here. So moving through, we got RBA Tuesday. Expected to hold. I mean, that's pretty much a given. So this is not going to be a big shocker unless they do something other than hold. This is the one that we're looking for, the press conference at 3:30. That's the one that they'll be looking for, because you want to see, are they still as hawkish as they have been? So we've had a little bit of sort of mixed data with it all, but remember, the jobs are still very strong and the unemployment is still stagnant. So they're the two of the things that they are looking at to see if they're going to see a bit more of a dovish tone. And we're still quite strong in both those areas. So I think that will definitely, I think that'll definitely be a point of interest of sort of what they say around those numbers as to how hawkish or sort of dovish it is. And if they remain hawkish, that's going to be your recovery idea. So that's on Tuesday. A whole bunch of PMIs coming out. I may as well do the news while we're here. whole bunch of PMIs sort of coming out on the Mondays. I don't think this is really going to affect us so much. We got daylight savings actually happening this week, which is always interesting, fun. I think it just stuffs everything. It puts everything back an hour, forward an hour. Back an hour. Yeah, so back an hour for them there. We got bank holiday on the Monday. So it'd be interesting to see if this just sort of continues through without really any sort of major shifting market news here. So we've got the election on Wednesday. So this is, all day kind of thing. You got services PMI. This is a big number that they're going to be looking for. Strong numbers for the US are going to give you the idea that, they don't need to do the cuts so much, so drastically. Um, I think it's pretty much set in stone, as I said, for the FOMC, which is at some stage. Where are we? It's on the Thursday page. Yeah, here we go. Thursday, Friday. Oh, okay. Oh, it's later in the week. For some reason, I've been telling myself it was on the Tuesday. Okay. Um, so yeah, that's later in the week. Okay, that's not too bad. So that's a couple of things. So we got ISM, we got the election stuff. I don't think we're going to get the result on there, anytime soon with that. So I think this is going to push on a little bit. Look, you got, New Zealand, blah, 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 blah. Okay, you got the BOE coming out as well. So they're looking to cut. Again, that, of course, if they cut, if that's the expectation and the market prices for it, BOE doesn't really tend to affect DXY as much as, say, sort of Euro or obviously the FOMC will. And then 6 a.m., oh, this is fun, on Friday morning, we got FOMC. And as you can see, 25 base point is the expectation. Again, I think the press conference is always the one that moves the market a lot more, unless they do a shock here. Say they cut by 50. They're not going to hold, in my opinion. I don't think they're going to hold. The more, I think I saw something, it's like 99%, pretty much 98% that they're going to do a 25 base point cut. There's always the chance that they do a shocker, and if they do 50, that'll sort of get the US dollar crushed. But I think the press conference is going to be the one that moves things in that area there. So, yeah, a little bit. I think the main sort of things, RBA, the election, ISM is going to move things a little bit, and then, of course, FOMC later in the week. All right, and back on with this. So what we're sort of looking for with Aussie is basically a continuation of this range through the week. If we get hawkish RBA, this could be the thing that sort of gets us moving out the top side over here. A dovish RBA is going to get us down over here, because the thing is, the thing that's been holding Aussie up so much is the idea that we have had inflation a little bit stickier. That's come down now. Not sort of all the way down, but it's moving in that direction. So that's very much one in the on the side, like, because obviously inflation is a big part of it all. That's what they're balancing. They're trying to balance the inflation. They're trying to balance a slowdown and recession. You're seeing sort of mixed data here. We're seeing employment very strong, as I covered a second ago, but at the same time, you're seeing the inflation idea come down. So people are going to be going, well, the rest of the world's cutting, inflation's down. Why can't we sort of do that? And I think that's something that could be leading to not necessarily a dovish move, but dovish talk. And the dovish talk could be something that rattles the market, because that's what's been holding us up a little bit. So that could be something that actually sort of, really weighs on the Aussie if they do come out with that. If they come out and they say, look, it's down, we need to see more of it, then I think that's when we're going to sort of see them sort of say a bit more of a hawkish stance. It's like one print is good. We need to see multiple. We need to see it lower. These kind of things are going to be the things that really sort of hold Aussie up. I don't think these are going to be the things that get the big breakout up here, because US dollar just trumps Aussie. That's the thing. So we can have a hawkish thing, but if US dollar is getting broken out, well, all it does is mean that we don't drop as bad as we would had we been dovish plus them breaking out to the top side. So they're the thing. It's a double-pronged thing with Aussie. Like, it's not enough to overrun the movement from the US dollar. Like, we will always be the sort of, the tail that gets wagged from the US dollar. But if the US dollar is selling off plus we are hawkish, well, this is what happens. Hawkish RBA with a US dollar selling off gives us some great moves to the top side. US dollar moving up, doesn't matter if we're still vaguely hawkish. Look at how much it just pulls back. So yeah, look, I still think there is a possibility for Aussie to recover a little bit here. Even if we do sort of move back up here, we could be starting to look at, if we sort of drag a fib from here down to here, we would be looking at, is that those ones over there? I have already done this. I have done it. So let's get rid of that, get rid of that, get rid of that. These are your levels moving up over here. Your 38%. Let's make this a little bit closer. You know, there's a good chance that if we do get a rally, obviously it's going to be capped, you could get back up to 66.90, and that's still at your 38%. So this is what makes me think that sort of like, yeah, we could be seeing, even if it is a short-term rally, that we could be sort of seeing a bit of a move down. Because remember, typically this is how structural work. You'll move down, you move back up, and then you get this leg here. This is what I cover all the time. Higher low, double bottom, lower low continuation. Aussie has not been doing that. Aussie has just been down. Like it hasn't even been giving any sort of bounce or reprieve. So it's got to have some sort of rally at some stage just for them to sort of reset, recharge, stop out some shorts. Because there's a lot of people in profit that have been shorting this down here to push it back up here to just sell it down here again. So that's what makes me think that we could have, even if it's a short term, medium term, push back up to around, say, high 69s, 69, sorry, high 66s, which is around the 38%, which is a very, decent continuation sell down, move to then sort of like come down and possibly go for the 64s. But, as we've seen, it doesn't really respect that, and it's just been sell, sell, sell at all costs. So that's why I said it's not guaranteed that this is a bottom. At the moment, we've just stopped going. But like you saw here, sold down, down, down. This is the same thing we thought here, and it was sitting sideways. Okay, it stopped going down. Didn't get a rally up to push back down. It just sold down from there. And see how this rally came down and then came back up and retested that area? This is the move that we're thinking here. This is what we'd be looking at. Sort of sit along sideways, comes down here, moves back up, retests, and then just on with the show, moving down like this. So, I mean, both are plausible trades at this sort of point, but that's why I think once we see a break of this little consolidation area, we're either going to see continuation like we saw up over here. So if you just pretty much picture that as that, you can see the same thing. Sold down, down, up, and then on its way. Now we've sort of stopped going. We're going sideways. Buyers are trying to sort of push up through here. If this breaks and comes down here, well, there we go for another leg down. We look down to maybe mid 64s, around the 78%. So I think that's the play there. Wait for this little range to break, and then that'll give some more medium term direction. Copper, which I have dubbed the heartbreaker, is very much one that just loves its range at the moment. It did sort of spike up here through end of the week, so we saw this very much a big break up. I'm out of all copper at the moment. Broke my heart too many times. But look, it is finding its range here. So, this is where we really need to sort of see it sort of come out of. Like a decisive, like you can see the reaction down here is very, very, very strong. And it's just all the way through here. So, really a break and hold above 443. I don't even think you need to get up over here. I think this would just be if a short-term stop moving back up, because this is just building itself up. This is what you're going to sort of see. Is this going to hold here? Are we going to get a move down like this? This is going to be a direction. Or are we going to see this move up here? And I'm going to put this down here because I believe that is going to be more of the breakout area direction. Albeit this could be, as I said, move up to here, retest these highs, back down here, move down here. I think once we break this range is when we're going to see the direction of the two. We've got supports and resistances sort of coming through both sides, so that'll give us some targets. But I think for now, it's really much just a hold and wait. See if we do see this move up here, I think that's going to help Aussie recover a little bit. If we see a breakdown here, Aussie's going to follow suit, and it's going to break down into the 64s at least. All right, and across with China. China, I didn't break it. It held its range. And this is the thing. This is what I said. China loves the grind. and this is it. Buyers sitting where they need to be. We've seen it previously. I think this is the I think I said this, and this is another thing as well. So I'll put this just over here. I had an alert set here, just under these lows on Friday on the vid, because I said, look, if we break this low here, you didn't want to just break this low here. You want to break these lows here. Came down here, would have caught a whole bunch of people, and then zoomed back up. These kind of moves, that is I don't know, like I think that's short covering, short squeeze. I don't know, like this is how you buy. Buy, takes a profit, buy, takes a profit. When it's just like straight up like that, uh, yeah, I think that's a bit more sort of like, okay, the data, everything said it should be going down. Let's just ram it right up through here. Pain trade, end of the week, elections coming up. Let's jam it back up the top side over here. So yeah, again, as exciting as this is, range. Wait for the break. Seems to be the theme of everything at the moment. And this is what I was saying, like, there's uncertainty in the market with the elections coming up. Like, you're not going to bet the house, sort of with this kind of stuff coming up at the moment. But I think once this range breaks, that's where we'll see our direction. We had our little sort of test out the top here, failed, bang, back into the range. Buyers stepped in where it needs to be. If the buyers are not here on this next test, then we move down. If the sellers give up this and we have a second break out the top here, I think then we move up to 718 over here. So China's actually been doing pretty weak in that. And again, look, they're not looking great if Trump does get in regards to sort of tariffs and all that kind of stuff. And that's going to be a bit of a flow on to the Aussie as well. All right. Look, I think that's pretty much it, actually. So covered it all there. Most things seem to be sort of ranging, grinding sideways, waiting on what's happening this week. Aussie potential recovery if we get the RBA sort of coming out with a little bit of talk. Upside is going to be somewhat capped, I would say, till we sort of hear what there's happening with the election, and also what's happening with FOMC. But I think pretty much expectations are holds across the board. So the press conference is really where we're going to be looking at. All right, that's it from me.